All right, my brothers and sisters. It's your boy Eon. Been a minute since I made a video on this channel. As always, I've always said that in every video. So my fiance constantly points that out that I need to be more consistent. So that's what we're gonna do. We're gonna be more consistent during the holidays. So, anyways, this isn't a trading video per se, but this is gonna just be a commentary video on your life as a ruthless hedge fund CEO. I wouldn't even, I don't know. I would say you're a hedge fund manager. I've never really heard too many people say that they're a hedge fund CEO, but I guess technically you are. You're the CEO of your own hedge fund. But anyways, let's jump right into it, my brothers and sisters, and see what we would be like if we were a ruthless hedge fund CEO.
It's 4:15 a.m. Your alarm is blaring. The bedroom in your mansion costs more than most people earn in a lifetime. You need to get to work, but there's a problem. You're in the Hamptons. Work is in New York City. Most people wouldn't
I would say this: he's gonna most likely take a helicopter. Most people take a helicopter from the Hamptons to New York.
have a chance of getting to work on time. But you, well,
I wouldn't even say most people. I'm saying like that, like that's normal. But I mean, if you're a hedge fund manager, I'm assuming that you're most likely gonna take a helicopter from your house in the Hamptons to New York.
you're different.
And then also, you probably do it the night when the markets are closed, so it wouldn't even be like that. Because you would, to be honest with you, in my opinion, if I was a hedge fund manager living in the Hamptons, I would rather fly. I guess it depends. Like if I have a family, I'd probably stay for like four, like wake up in the morning, like it was super early in the morning, and then head to New York. But if I didn't have a family, I would rather go ahead and be in New York trading day. That way I can get as much rest as possible and, be a little less hectic before I'm getting into the markets.
There's a black SUV waiting outside your place. After you get in, the driver takes you directly to your helicopter. This is a
Sorry about that.
perfect opportunity for you to check emails and catch up on anything your Tokyo office sent over. Looks like you've lost $12 million while you were sleeping.
Chump change. I'm joking. I'm joking.
No big deal though. You made 40 million yesterday while eating a tuna sandwich. The helicopter lands atop your building in downtown Manhattan. You're greeted by your VP who fills you in on anything.
I'll also say there's not too many hedge fund managers are going to fly their own helicopter to their offices. Usually you're going to be flown to the offices via helicopter. And then usually also, sometimes if you're like, at least from what I've seen or known of, you most likely will fly somewhere within the vicinity of your office or maybe like near the water, but not too often will you see people who have a helipad on top of the office. I mean, it is there. They do have it, but it's not often.
You might have missed. Before you head to your corner office, you opt to do one of your walkarounds. Basically, a time.
And I'll also say this is a successful hedge fund manager. There are plenty of hedge fund managers that go broke. Like they started a fund, maybe their strategy or their edge just isn't working out for like a year or so. Because a lot of hedge fund managers are going to be a little bit longer term in their views and stuff like that, or maybe they're like, a safe, quote unquote safe hedge fund where maybe they started the hedge fund right before a recession or something. You know what I mean? So I'll say that, but there are a lot of hedge fund managers that are not super successful like this, or that are successful but just aren't as successful on this level.
To look over the shoulder of every employee and make them pee their pants. You approach a fresh college graduate you haven't seen before. He's a junior analyst. He's been working 120-hour weeks and hasn't slept in 3 days. A Harvard kid. You notice the Excel spreadsheet he's working on looks a little sloppy. So you scold him in front of everyone, calling him every name in the book. You tell him, never make this mistake again. The kid, shivering with fear, says, yes, sir. You don't.
I'll say this: I wouldn't. I get the frustration to an extent because if you're making investments that could make or lose millions of dollars or potentially billions, depending on your position size and everything like that, or market conditions, like I could get the frustration. Trust me, like But I don't think that you need to go that far to yell at somebody and all that jazz, like, you know, and humiliate them in front of the whole office. I think that's a little crazy, but I do get the frustration. I do get it because there is really almost no room for error to an extent. And the thing is if there is error, even if it's on the hedge fund guy, he's gonna blame it on this guy. So it sucks, but that doesn't happen everywhere, but it does happen.
Even acknowledge it. On to the next. The air smells like testosterone. It's not just the Harvard kid. Everybody here is vibrating. To your left, a trader is screaming into a headset, smashing his fist against the desk so hard a key flies off his keyboard. He just lost $500,000 on a bet. 2 minutes later, you see him laughing and high-fiving a coworker because he made it back on a risky gamble. It's insane.
Okay, I won't even say that. You're not to lose 500,000 on one position. I mean, for one, he would have to be a higher end, like senior trader. But then also, I won't say that it's a risky gamble. You know, I mean, we all have edge and we all have emotions, and sometimes those emotions get the better of you. I mean, the majority of the time, to be honest with you, you're not gonna see too many people who are angry like that. Um, I'm not saying that it doesn't happen, but I mean, a majority of the time, people are going to be making money when you're trading, unless it's just a random volatility event. I mean, the majority of the time, you're making money. And you might lose 500,000, but you know, you if you're trading, I mean, like let's just say that he has like a $50 million book. You know, $500,000 is like 1%. So it's not like he's gonna go broke if he has $50 million to manage. And then he could easily make $1 million by the end of the day, and make technically be up 1%. He's up 50,000. I mean, 500,000. So, I mean, I mean, it's just part of the. I mean, it's part of the industry. You know what I mean, or the game, how you want to look at it. But I mean, you do have those days where you're frustrated. Like I had one, we were like 2 or 3 weeks ago. Like I didn't trade at all during the week for the most part, and then I just decided to trade sporadically in Friday afternoon like an idiot, and it was my first losing week in months because I didn't trade. I think I take like one trade and I was up a little bit, but I lost a decent amount that Friday. Like it was just choppy. Like I mean, it's pretty much everybody knows when you're just in a choppy market. Like you, for one, you shouldn't be trading. So that was my bad on that part. But anyways, let's jump back.
And you love it. You pass a guy named Big Tony. He's not looking at charts. He's staring at the weather report in Brazil. Why? Because if it rains in Brazil, the coffee.
Also, to use like not too many people are going to be looking at a weather report on your phone. You're usually going to look at it on like a Bloomberg terminal, or you would actually be looking at the weather channel of Brazil, like on a TV or something. You're not going to be looking at that. You want to actually see the report of like what the meteorologists are saying and stuff like that. Like, yeah. I mean, you could look at this briefly if you want to, but I mean, if you really have a decent amount of capital invested in Brazil, or you need, crops in Brazil to go down or whatever, I mean, you're gonna put a lot more research in it than just looking at the weather.
Harvest is ruined. Coffee prices skyrocket, and the bets he made yesterday will pay for his divorce settlement. It's 9:29.
And I'm not saying this as though I know everything. I'm just saying things that I've seen, because I haven't traded on anything like that. I pretty much just trade, like mostly technicals, decent amount of macro, but I'm not betting the house on, you know, foreign weather reports and stuff like that. Unless I'm doing like some personal gambling, like if I'm on like Polymarket or something like that, just for fun. But I wouldn't. I mean, I wouldn't place too much capital on something like that. Now there are people who do that, but not me. So I can't really tell you for sure. And I'm pretty sure there's somebody who's like, oh, this guy has no idea what he's talking about, which that's fine as well.
9 a.m. 1 minute to market open. The room goes silent.
Okay, it's not like this because everybody looks scared. Like usually you're like you might have a little bit higher blood pressure at 9:29, but it's not like you're gonna look scared. You just
50 guys in $3,000 suits staring at 6 months.
Okay, and then also a lot of people who trade aren't going to be. I mean, there are people who do work at an office that will wear suits, but I mean, a majority. It depends on what office you're in. Some traders will allow you to, or some offices will allow you to dress, more casually. Um, it might be frowned upon because everybody's gonna be like, "Oh, you can't afford blah blah blah," but it's like, man, nigga, fuck you. I know this is not a super conservative channel to where I'm not gonna curse, but yeah, I mean, I'm a trader for a reason because I want to say whatever I want to say. So there you go. 929. It's not that bad.
Monitor
It is volatility. It is a lot of volatility. So I mean, you should expect to have a decent swing in P&L if you have positions open or you're getting in positions at 930.
each.
But
Chaos erupts. It's a gladiator arena. You walk into your glass office, close the door, and the noise dulls. You are the conductor of this insanity. Everyone in this office has one job: make money. As a hedge fund, the super rich, billionaires, pension funds, university endowments hand their money over to you. They're counting on you to make them even richer. They expect greatness. If the
all right, so I'll also say this: they're not expecting them. So some of these aren't expecting you to make them richer. So okay, it's billionaires, yeah, you're gonna want to be richer or whatever. But pension funds, and,
university
the university endowments, I mean, they do want to get richer. They do want you to perform and make money. But you usually, like, when it comes to pension funds, like the manager of the pension fund has a fiduciary responsibility to make sure that the people who are invested into that fund are able to get positive returns for retirement. So
the
I'm just saying that it's not like pension funds are like are the same as billionaires. I mean, usually the managers of these pension funds will be decently well off because they're managed. They have to. They're pretty much like a fund of funds, where they're investing in like other hedge funds. But like for instance, like if you're a police officer in New York, you're invested into a pension fund for your retirement and stuff like that. And a university, of course, like I've always thought it was weird that universities will have endowments and all this extra capital, but then still expect people to pay tuition. Like because really, if you really think about it, like the endowments could pay for a decent part of future tuition for people, which I'm pretty sure they do that, but I'm not really 100% certain on that for sure.
endowments hand their money over to you. They're counting on you to make them even richer. They expect greatness. If the stock market goes up 10%, your clients expect you to go up 20%.
Okay, so that's something I've also wanted to talk about on this channel is like delta. Like I mean not delta, but beta. Like if you have a positive beta, um like a beta greater than 1, you're getting better returns than the index. So I know a lot of people would say, "Oh yeah, like all you need to do is invest in index funds and blah blah blah, like just invest in a Nasdaq or just invest in S&P." But then let's say that instead of investing in this is going to be a whole nother video because this is going to be a lot more complex. But let's say that the S&P goes up 1%, you're going to get pretty much 2% because you have a higher beta than the index.
If the market crashes, they expect you to make money anyways. And this is where the real game begins. Most people are optimists. They buy a stock for $10 and pray it goes to $20. That's cute.
So I'll say this. What I do is I am a scalper. So if I buy something at $10, if it goes to $10.25, I'm good. If it goes to $11, I'm good. Now I do every once in a while I get shit wrong, and I'll buy it at $10, and the next thing you know it's at $9 or $8. And then at that point I have to decide, do I want to buy more and average in my price a little lower, or is this something that could potentially go lower to like $5 or $4, and then I'm down a decent amount of capital, and then you're like, oh man, why did I even put myself in this position? So that being said, a majority of the time you're going to make money as a scalper, and every once in a while you just get into these positions that you're just like, why did I even put myself in this position? And why did I hold this position? Why did I add to this position? And should I continue to add to this position? Because it goes from being a scalp or day trade. I won't even say a day trade because if I'm day trading something, I wouldn't want it to go from like that would be extremely volatile for him to go from like 10 to 8 or whatever. That'd be extremely volatile. But if I'm doing something like, let's just say, it's not technically a scalp, but it's like me just getting a little bit of profit. So like, let's just say from it to get to $10 to $11, let's say it takes like 4 days. But then for it to go from $10 to $8, let's say it takes like 2 days. I mean, you kind of have to think about this stuff. But I'm long only when it comes to indices. I mean, not indices, well, not indices, but equities. I don't like to short if I don't have to.
You are a predator. You specialize in the dark art of short selling.
Oh,
Basically,
see, it's crazy. I just said that I'm not a short, but there's nothing wrong with short selling. I mean, like it's perfectly fine. I mean, you need liquidity. Like if there's not people who are willing to short or to sell shares, then when I'm long and I want to get out, I need somebody to be you could say somebody could buy it at that higher price from me, but then also if somebody's willing to sell and borrow the shares or whatever, however you want to put it, like if there's somebody that's willing to sell, it just gives more liquidity, and that's why you have active markets, and that's why you have illiquid markets, to where it's hard to get out of a position because not too many people are buying or selling that equity, and that's an issue within itself. So you need people who sell. I know a lot of people say it's not American, but I mean, without liquidity and volatility, it's hard to get in and out of positions. So they're needed. They're needed.
you bet that companies will fail. You find a weak gazelle.
And I'll say this: it's not even that you're betting that the company is going to fail. You're saying that the company will underperform. Like that sounds so like that sounds so much like corporate talk. But I mean, you don't. Some companies you will say they're going to fail, but like some companies you're just saying like like let's just say that, like let's use an example with like satellites or something like that. Let's say that when it comes to Walmart, you should notice that there was less foot traffic on Black Friday. So you think, and a couple weeks and around those major like the holiday season, and you notice that you've used satellites to realize that there are less cars in Walmarts across America or whatever. So then you'll say that I want to short Walmart, not thinking that Walmart's going to fail, but just that it's going to underperform this quarter, and their earnings are going to be less than ideal. So I personally wouldn't want to sell until around that new, like the earnings report comes out or something like that, because you could sell and a position could go way against you. So let's say, for example, you're short at $10, and then that's thing it's at $14, and you still have two, like let's just say, I won't even say 2 months. Let's say you have a month before earnings. A lot could happen within a month to where it could go up to 20 or 25, and then you're still at 10, and you might be averaging your price up, and the market's still going against you. And then finally, when the earnings come out, then you get the move that you needed, but you've taken a lot of heat, and in my opinion, that's underperforming as well as a manager, because you should have, or you ideally would have gotten it short higher and had a quicker move. That way you're not wasting capital for that month of drawdown.
In the herd, and you attack. Your researchers rush into your glass office. They hand you a folder on a popular tech company. Everyone loves this company, but
The company I can think of that everybody does is Tesla. I'm trying to think of what's another one, or Nvidia. Like Tesla was like 2020, everybody was like Tesla was making new time highs, it was going crazy, and now it's Nvidia. Like you have these cycles, or I'll say this, it could be like right now we're kind of going through a metals cycle, whereas like metals are just making new all-time highs like every day or every week. But metals and Nvidia.
your guys found a secret. Their new product explodes if you leave it in the sun too long. You smile. It's payday. You bet $500 million that the company will crash. But you don't just wait for it to happen. You make it happen. You
Okay,
go
so this will happen. I won't say that I've ever like done this or known of somebody that's done it, but I've heard of people who have done stuff like this from people who've worked for the guy done stuff like this.
on a major TV news network. You look
And this is illegal. Illegal.
right into the camera with a grim face. You tell the world, this company is a zero. Panic spreads instantly. Grandmas and day traders sell their stock in terror. The price nosedives. The company collapses. In 20 minutes, you just made $80 million. And here's the best part, the 2 and 20 rule. You charge your clients a 2% fee just for holding their money. That's guaranteed cash. But you also keep 20% of the profit.
And I'll say this: a majority of the time, what ends up happening is that 2 and 20, that 2% usually just covers administration costs. So like secretaries or base salaries for your traders or analysts or risk department and stuff like that. So it's not anything. I mean, it can be something crazy. Like if you're managing, you know, uh, like let's say you're managing like $10 billion. I mean, 2% of $10 billion is a decent amount of capital and way more capital than you really need for just administration costs. But let's just say you're a small firm and you're like, let's say you have $100 million. 2% is still $2 million. You know what I mean? Like that's still a decent amount of capital. But usually you're not going to be able to have like a huge team with that. But anyways, just explaining it.
That means you personally just pocketed $16 million before lunch. You celebrate. You buy a yacht that has a smaller yacht inside of it. You buy a painting for the lobby that looks like a toddler scribbled on it with a marker. You take your wife to dinner, then you take your girlfriend to your mansion in the Hamptons. So how do you...
I'll say that's stupid. For one, like you take your wife to dinner, then you take your girl. Sorry, excuse me. You take your girlfriend to your house in the Hamptons. Like that's crazy. One, I don't think you should ever take your girlfriend to your house. Yeah, that's crazy. I don't think you should have a girlfriend if you have a wife.
actually win? Do you read the newspaper? Please, newspapers are for poor people. You don't guess, you cheat. Well, legally.
I'll say this, like this is like this does happen, but in my opinion, a majority of the time, it's pretty easy to make money without doing anything illegal. Like usually when you're doing stuff illegal like this, or you're doing any insider trading, it's usually just the greed of wanting more. But you're usually already profitable and having a successful quarter or year or whatever. It's usually just the greed of just wanting a little bit extra. Like let's say you make $100 million legally, not doing anything wrong, but then you find something else like that's technically illegal or whatever, like doing what he just did, and he only made $80 million. Well, we'll go based off this. We'll say he made $80 million. Let's say he's already made $5 billion for the year, or something like that. And then that $80 million is nothing compared to the 80 billion that he's already made. I mean, the 5 billion he's already made for the year or whatever. That would have to be a crazy year. But anyways, I'm just kind of throwing out random numbers. But I'm just saying that usually if you're making a lot of money, the illegal stuff that you do, you're not betting the house on. So it's not like your returns are gonna be anything like life changing. It's just because you wanted a little bit of extra and you just saw the opportunity. And sometimes when you see opportunity, you're like, yeah, like what the hell? You know what I'm saying? Like I would just say this as a normal trader. I wouldn't do anything like this illegal, even if I have a hedge fund or something like that. But you would I don't have a hedge fund, by the way. I don't, maybe this is the first time seeing this channel. But even if you're making a lot of money, because you're thinking about, let's say you've placed 10 trillion, I mean not 10 trillion, but 10,000 trades, and then it's this one trade that just so happens to get caught. and you've made, a ton of money in those 10,000 trades over the year. But then it's just this one trade where you've made a decent amount of money, but it's like nothing compared to what you've made for the year. And it's just a little extra. And I know I'm kind of going in a circle, but it's just crazy to me because that's one of the things that happen when, for one, you're doing really well trading. Like, you're like, it's almost somewhat of an addiction because you're doing so well. You're like, man, what the hell? Like, let me just, you know, keep trading, or let me get something a little extra. And that's how you put yourself in these situations.
You use alternative data. That is just a fancy word for spying. You hire.
Okay, I'm gonna say this. Like, a majority of people in hedge funds and stuff like that are gonna use some type of like data that the public has access to. They might just get it a little bit quicker, or might have a little bit, you know, um, they might be able to transact their orders faster. They might have some type of algorithm that can access this information um, faster than a human can click a button and stuff like that. So, I mean, like, there's edges that don't need to be illegal. But I know this video is about illegal stuff or evil. I think it was evil, right? Or ruthless. I mean, a majority of the time, like, there are hedge fund managers and stuff that are just normal people who just so happen to trade and manage capital.
A guy named Vinny to sit in a bush outside a factory in Nevada with a pair of binoculars, just to count how many delivery trucks leave the loading dock. You buy photos from literal satellites in space to count
Okay, I mentioned this earlier. I did mention this, but I don't see why you have somebody like Vinny do that when you could easily just set up cameras somewhere. Um, but I mean, hey, maybe they don't want to get caught or the camera to get found or anything like that. But
cars in
who
a
knows?
Walmart parking lot.
If I literally said cars in Walmart earlier in this video, that is crazy. And that's such a coincidence that I said cars in I said holidays. I did say holidays. So let's see if he says holidays.
The lots are empty on Saturdays. You know their
Okay.
earnings report is going to be a disaster. You even track the
That's
private
crazy.
jet of a CEO. If he flies to Omaha, nobody cares. But if he flies to the Cayman Islands 3 times in a week, you know he's running away with the money. You know a company is failing before their own accountant does. And once you smell blood in the water, you attack. You are the king of the world. Until you get cocky. 6 months later, you bet against a company. You think their new product.
I shit you not, this happens to everybody. Anybody who's trading or investing. You could be long, technically doing the right thing, and a Trump makes a random tweet, and or it doesn't have to be Trump. It could be like China said something, or anything, but it could just be anything random that's not a planned, volatility event like CPI or non-farm payrolls or something like that. And it could just be a non-scheduled event, just some random news that comes across, and your positions just get screwed. It happens to the best of
Product
us.
is a dud. You bet $1 billion that the stock will drop. Monday morning news, the product is a hit. The stock explodes upward. It doubles in an hour. This is the nightmare. When you buy a.
And I'll tell you this also. This is how a lot of hedge funds do go out of business. Like, I have this one mentor in private equity, and he was telling me about how often it is that a lot of these hedge funds go out of business. And it could be like one like rogue trader that just so happened to just bet way too much, or maybe it could be a series of unfortunate events for multiple traders. But it happens a lot where you kind of get cocky and you're trading other people's money. A lot of this capital isn't your own. I think one of the things that a lot of people probably wouldn't know is that a majority of traders will trade other people's capital. And then for, our own capital, we would be in like safer assets that aren't volatile, because you're already, dealing with a lot of stress and trading volatile assets every day. Your own portfolio might just be super long term, maybe like, I won't even say like bonds or were that crazy until recently when we've had higher interest rates. But for example, you might do CDs or bonds or, like things that are safe are like longer term stocks and stuff like that. Like you're not gonna see me. Let's say I made 100 grand a year or something like that. You're not gonna see me put 100 grand into trading Nasdaq, my personal account in Nasdaq, and then also going to work and trading that account Nasdaq. Like you're like tapping risk on top of risk and this stress on top of stress. And then if my portfolio is doing bad, I'm doing bad on the work portfolio as well. Like I would rather just be like, for trading purposes, I would say like if I'm trading my personal account and I'm also managing other people's money, I would do like monthly, weekly charts, daily, probably on the smallest time frame for my personal account. And then with other people's money, I'm like locked in trading, trading like on a 5 minute, 30 minute, 60 minute chart. Maybe I would probably even go to a 4 hour chart if I'm trading other people's money because I need to like I don't really have edge on a 1 minute chart, so I wouldn't use it. But like probably the smallest time frame I'd go is like a 2 minute. But I'm mostly on the 5 minute. But I would not want to trade risk on top of risk with my own capital and then other people's capital because that's how you put yourself in situations where you're gonna mess up your capital and other people's capital because the stress of both will just eat you alive.
Stock, the worst that can happen is you lose your money. But when you bet against a stock and it keeps going up, your losses can go up forever.
And this is what I also say. This is why a lot of people use options. Like so, and if you're thinking that the markets now they will mess up and put $1 billion trying to short an option, that's very rare where you'll see something like that. Usually, you're gonna have to do some crazy orders and have like some prices where you're like let me get 100,000 here. I mean, you're gonna average into that $1 billion position or something like that. And you could lose $1 billion, but the thing is at least when you're buying put options, you're capped. But where a lot of people end up going into a situation where they blow up is they're just short, short the underlying. So we'll use what's a stock? We'll use Oracle for example. Oracle has been getting destroyed the last few months. Um, you're short the stock, and then you're also selling calls, then you're also buying puts. You're like leveraging into a crazy short position, and then all of a sudden it just takes a little bit of movement to the upside to just screw you. Like the short calls are starting to get assigned. You know what I mean? Like those puts that you bought are starting to become extremely worthless. Then the stock is starting the shares of stock that you borrowed to short are starting to, you're wishing you never borrowed them in the first place. You know what I mean? Like you can really put yourself in a bad position because you get too locked in on like one like idea of shorting Oracle instead of diversifying your risk. I will always say that diversification will save you because if you're short Oracle, but then you've also been long gold, you made a lot of money. But let's put it this way. Let's say that you were short Oracle, and let's say in the next 2 months, Oracle starts to rally again because of whatever's going on. It's not going on anymore. Then, and then gold is starting to do something. Like it's very rare where you'll have all of your positions, if you're diversified, all go against you at the same time. And I'll mean true diversification. I'm not saying that you're long everything in the US. Like I'm talking about your long equities in the US, your long maybe equities in India, or your long equities in South America somewhere. And then you're like true diversification. Maybe you're not just long equities, maybe you also have some currency positions and some bond positions as well. And maybe you also have some commodity positions in crypto and like true diversification. To where not everything can really go against you all at once. Like you're gonna have positions that are kind of like breaking even or hovering around and stuff like that. But I'm just saying that when you diversify, the likelihood of you going completely bust lowers because we're all dealing with probabilities.
Basically, it's a black hole sucking money out of your account. Your phone screams. It's the bank. They're freaking out.
Call.
They want you to wire them cash right now to pay back your loans.
I'll say this: they're not freaking out. Like usually, they're gonna be very cordial. They're not gonna be mean because they want the money back, but they are gonna call you, and they are gonna, you know, they'll put it in a nice professional way of saying, "Give me the fucking money,"
But you don't have the
or you know, you got to pay up that margin. You know, there's traders who I've known that have had to put up their car or their homes as collateral for margin, and that's the thing a lot of people never talk about in trading. It's like, well, I'll say like retail trading, or if you're just an investor like at a family office or something like that. Like it happens, it does happen. It happens a lot. If you ever talk to a broker, um, or just traders who have like really been through the struggle, you could put yourself in some really uncomfortable positions to where you're like having to, you know, put up a lot of things as collateral, like assets, you know, that you would not want to do, but you know, you have to meet the capital requirements or whatever the broker's telling you got to meet to keep the position open, unless you want to be liquidated, and that is stressful.
cash to pay the bank. Your cash is tied up
I would never recommend you do it, but you know, sometimes you put yourself in those positions, and it does happen.
in other bets. You start sweating through your $5,000 suit. You scream at the Harvard kid again. You fire him just to feel something.
See, I told you that. I said that early in the video. I was like, even if it was the hedge fund manager's fault that it didn't have anything to do with the spreadsheet, he was gonna blame it on the kid. It's crazy. Like, I mean, this is predictable stuff. I will say that, but you know, people often don't want to take blame, especially when you're doing so well. You don't want to take blame for your own actions or ideas, because that Harvard kid didn't he wasn't the one that told you to put $1 billion into this. Maybe he was the analyst that saw the, you know, the flaw in the product or whatever like that, and then maybe his his conviction on it gave you conviction to, but you know, but I mean, $1 billion is crazy for one. That's a decent sized position.
You have to sell your winning stocks just to pay for this disaster. For a week,
See, that's what I was just saying. That's the margin call.
you survive on coffee and panic. You stare at your computer screen, praying for a miracle. Then you get lucky. A rumor spreads that the CEO of that company kicks puppies. The stock drops. You get out. You didn't make money, but you didn't go broke. You walk out of the office at 9 p.m. on a Friday. You go to a steakhouse where a bottle.
I'm gonna tell you this, man. This shit is crazy. So when you see stuff like this, or when positions come back when you've been stressed, and that margin, you're getting a margin call, and you just don't want to deal with it, so you put your phone on mute, or you block the number. I'm not gonna say you should do that, but like, you should. I mean, like, it eventually gets to a point to where you're just stressed, and the position comes back in your favor. This is something that goes in my head. Like when positions come back in my favor, I'm like, yo, we did it. We made it. And the thing is crazy is like, you know that it was luck, but then you're also feeling like I was kind of like smart enough to hold that position, and it was pretty baller. You know what I mean? Like, it's so stupid, but like you kind of think you're smart to hold a position and not just close at a massive loss. Like it is something like, I mean, at least this goes through my head. I don't know if it goes through anybody else's head, but it really does go through my head when I'm in a decent loss and the position comes back, and maybe I didn't make money, or made a little bit of money, or maybe even lost a little bit of money, but it was nowhere near losing the max, like, and then losing everything type stuff.
Bottle of water costs $20. You look around. You have no friends here, only competitors and people who want your money. Your kid barely knows you. Your life is just numbers on a screen. You are worth $2 billion.
Okay, this is what I'll say. The fact that he placed, you know, it depends on how much money he had under management, or assets under management he had. But to risk half your fortune on a short is pretty ballsy to me. That's crazy.
You can buy anything on earth except a good night's sleep. Your phone buzzes on the table. The Tokyo markets just opened. You're up $2 million. It's never enough.
That's funny because, like I said earlier in the video, it's never enough. Like you could be up a decent amount of capital, and like it'll never be enough because it really does. In my opinion, it does become somewhat of an addiction when you're trading really well. Like it feels like the market is speaking to you, and it's crazy. But anyways, hope you enjoyed the video. Until next time, guys. Peace.
Man, even Jesus had a shooter, and God be having unbelievers that didn't mess up their demeanor. And yes, they know it's hard, they know, cause when they be up in those trenches, man, they show out.